Good afternoon. Everybody ready to go? All right. Well, I think Australians should take confidence from another solid GDP outcome with an economy that continues to outperform the developed world. GDP grew by a solid 0.6% in the March quarter and by 2.5% through the year. This means that the Australian economy grew faster than almost every advanced economy over the year and 3 times the OECD average. So today's result, I think, really does shine a light on the resilience of the Australian economy in the face of challenging global economic circumstances and also in the face of some very significant economic transitions at home. It comes at a time when the euro area is enduring a longer recession than it experienced during the global financial crisis, having entered its sixth straight quarter of negative growth. In fact, 9 out of 23 advanced economies that have reported March quarter results contracted in that quarter, and many others continue just to limp along. So you can see that Australia is doing very well compared to many other developed economies. Now, this also comes at a time when the high dollar continues to bear down on many of our industrial sectors, making the transition towards non-mining sources of growth more difficult. But unlike other countries, we face these challenges from a unique position of strength. Few countries in the world can boast a unique combination of solid growth, low unemployment, contained inflation, a AAA rating and record low interest rates. And as we can also see from the chart, the economy has continued to outperform over the past 5 years. Remarkably, our economy is 14% larger since when the government came to office, outstripping every other major advanced economy. And it's important to bear that in mind when we're evaluating quarterly results. We've got to look at them in the overall context. So this says something special about the resilience of our economy and our people. Now, I just wanted to go through some of the individual figures. As I said, GDP rose by 0.6% in the quarter, 2.5% over the year. This reflects a large contribution from net exports and solid growth in consumption. Net exports contributed 1 percentage point to growth, the strongest contribution for 4 years. This partly reflects the transition that I've talked about in the budget and on many occasions that's taking place from our resources sector to our non-mining sector, and in particular reflects the transition in the resources sector itself from an investment construction phase to a production and export phase. Export volumes contributed 0.3 percentage points to quarterly growth and are now up a strong 8.1% over the year. If you exclude the post-GFC bounce, this is the strongest annual growth in export volumes in well over a decade. And this was largely driven by a strong rise in non-rural commodity export volumes, which are up 13.2% over the year. And while quarterly growth can be volatile, we expect export volumes will be a key driver of growth and productivity as we go forward. We see in these numbers further evidence that we've broken the back of weak productivity growth that we inherited from the coalition, with productivity growth remaining above trend over the year at 2%. The jump in net exports was also driven by a large decline in import volumes, with capital imports falling by 12.3% in the quarter. And this is consistent with a decline in new private business investment, which fell 4.3% in the quarter. And I think this largely reflects the lumpy and capital-intensive nature of very big resource projects. While the investment phase of the mining boom is near its peak, we shouldn't forget that mining investment is lumpy quarter to quarter and is set to stay at high levels for some time to come. As the figures show, new business investment is still around 50-year highs. I'll repeat that, 50-year highs as a percent of GDP at 17.5%. And there is also more resource investment to come, with an investment pipeline of $268 billion at the committed stage. This shows we're continuing to convert the terms of trade boom into a massive expansion of investment and enduring export capacity. Nevertheless, there's still patchiness in parts of the economy, but that isn't surprising given the continued strength of the dollar and the gradual transition towards non-mining sources of growth. And this transition was never going to be seamless, but it is encouraging to see that lower interest rates are continuing to support activity in non-mining sectors. For example, new dwelling investment was up 2.2% in the quarter and 10.2% over the year, which is the strongest annual growth in 10 years. Forward indicators point to a further recovery in housing construction, with building approvals up 27% in the past 12 months. And of course, while consumers remain cautious, low interest rates have boosted household incomes, with consumption strengthening in the quarter. And as you can see from this chart, which comes from last week's capital expenditure survey, it points to further growth in business investment from already high levels, and that is quite encouraging, not just in mining, but also in the non-mining sectors. It shows that upgrades to mining investment intentions in 2013-14 are continuing, but it also points to encouraging signs of improvement in parts of the non-mining economy. All of these figures are consistent with our budget forecasts. And of course, going forward, record low interest rates will continue to benefit families and small businesses right across the country. So I think, in summary, when you look at today's national accounts, I think they are a reminder of what Australia has achieved over the past 5 years, and a reminder that we can face the future with confidence. Now, I think there will be the commentary from the predictable quarters that will try to put the worst possible gloss on every one of these figures, and I look forward to reading all that tomorrow. But I think what is most important is we examine the facts in these figures and analyse them in their correct context. We have an economy in transition. We have a high dollar, which is making that transition harder. But, we'll see the doomsday predictions that people will have when they look at these figures. But the reality is the Australian economy is in good shape and is handling these transitions very well. We've come through the biggest investment boom in our history, and we've come through that with contained inflation and with record low interest rates. That is an incredible achievement. We've come through the worst global conditions in over 80 years, and we've got an economy that is 14% larger than it was at the end of 2007. And we've got an unemployment rate with a 5 in front of it. That is a unique combination of economic strengths that put us in a very good position to meet the challenges posed by the transition within the mining sector itself, from investment and construction to export and production, and the transition from mining to non-mining growth within our economy. And our economy remains a standout of the developed world, and we are in a very strong position to maximise all of those opportunities, which is why our recent budget was so important, getting the big economic decisions right for the future to make sure we continue to grow in what is a challenging global environment. And I might just note that just overnight we've seen a speech from Christine Lagarde. She refers to a potential soft patch in global growth. The point I want to make is that our recent budget was focused on growth and jobs, making sure that we supported our economy as we went through these two transitions I've talked about, as well as meeting the challenges posed by global economic uncertainty and volatility in the global economy. Our fiscal settings have given the Reserve Bank the room to adjust interest rates to the point that rates are at record lows and stimulating the non-mining sector. We have put in place a budget which will support growth in the face of revenue downgrades, precisely because of the uncertainty that flows from the global economy and the transitions we're going through, and making sure we're putting in place the big investments for the future, such as the NBN, better schools and infrastructure. All of that comes together, as part of our response to the challenges our economy faces in the future. So in our budget, we expressed a very clear position and preference for economic settings supporting growth, which is why we are taking a little longer to come back to surplus, because we understand the challenges we face both domestically and internationally from the global economy. And now is not the time for our economy to face severe and savage cuts in key areas of expenditure such as health and education and infrastructure. That is precisely the wrong way to go, given the circumstances our economy faces. It doesn't need a sledgehammer taken to federal government spending in the circumstances that I've outlined. So this government will continue to put jobs and growth first, to make sure that the Australian economy continues to meet the challenges of the future and is stronger and smarter as a result. Over to you.
Mr Swann, you talked a lot in the lead up to the budget about the gap between nominal and real GDP, and the fact that nominal GDP was below real GDP. It seems to have swung back into the positive with this set of numbers. But are the figures positive enough to be consistent with your budget forecasts, or are there some concerns that...
No, the real GDP figures are consistent with our budget forecast, but the nominal figures are a little weaker, actually, than our budget forecasts, because trend nominal is up around 5. Real GDP trend growth is around 3. So it's encouraging to see nominal come back, but it's a little weaker than we had in our budget forecast.
And what does that mean for your revenue in that case?
Well, first of all, real GDP growth is consistent with our budget forecasts. There have been a number of other changes since the budget come down. The dollar has come off quite substantially, so it'll be a bit early to be making a call about what it meant for our revenues over the next 12 months. I think that's just premature. But I would point out that one of the real factors that is impacting on our economy at the moment is, in fact, a lower dollar, which has come off since we brought down the budget, and that will also be having impacts over the longer term. How long it stays down is something for the markets. But if we step back and just analyse what we've seen today, which is strong growth in exports and strong expectation of that growth in exports is going to grow, what we've got is pretty solid consumption as well as some lumpiness, if you like, in investment, particularly in some states. A sustained depreciation of the Australian dollar in those circumstances would be a very good thing to further stimulate growth in the non-mining sector.
Treasurer, you've described these figures today as an incredible achievement, and you've seemed quite proud as you've gone through the various economic indicators of the government that some others in your position might have been tempted to describe as a beautiful set of numbers. But why do you think then that the government is not getting the credit from voters in the polls and in all the various ways things are measured for the low interest rates, the low inflation, the low unemployment? Why do you think the government's message is not getting through on those issues? Well,
first of all, I'm happy to answer that question, but can we just actually deal with the GDP numbers first, and then I'll come onto the general questions, because getting so quick to a question like that may actually demonstrate part of the challenge that we face.
On state final demand, WA has had its biggest contraction over the last two quarters since at least the 82-83 recession. Do you believe it's a one-off and that will stabilise, or is the slowdown, particularly in the hard rock area, in the resources sector,
well, it would be good if we could get the
WA?
CapEx graph back up. I think and what we've seen is that there's a number of large projects which have been completed, so I think that's evident in the data. There are further projects which are at the committed stage but haven't yet commenced. And then there are others that may go to the committed stage or to a final investment stage. So I think what you're seeing principally in the case of Western Australia is the impact of lumpiness, particularly when you look at on a state-by-state basis. But Western Australia is so big in mining, I think what you're actually seeing there is a couple of things. One is either this year or next we are at the peak of mining investment. I think everybody agrees on that. But what you see in the CapEx figures is that it's a gentle plateau. It's not a cliff as it's been portrayed in some of the public discussion. These guys are shading it out But see, even there on mining, and you know, and Western Australia is such a large part of that story, there is still optimism, but you may just be seeing the impact of the lumpiness. But the other interesting thing in there is that the slight kick-up, which is probably has a greater impact than the shape of the line would indicate there in non-mining as well. So I think Western Australia is a demonstration of the transition that we are making, which is amplified in WA because mining is such a greater proportion of the economy.
Treasurer, domestic demand contracted in the quarter. So while the economy is doing very well from the point of view of exports, the domestic economy seems to be far from healthy, really. What's the government's response to that? How does the government feel that? Is there anything it can be doing to do more to support domestic demand? Does it think that there's? Do you see light at the end of in the future?
Well, we are involved in a transition from mining sources of growth to non-mining sources of growth. And that's why the monetary policy settings of the Reserve Bank are so important. And I went through a range of data, particularly when it comes to dwelling construction, that indicates that handover is happening. It's not necessarily as fast, it's not necessarily as big as we would like it. But let's go to the other component of the domestic economy, which is consumption. Consumption is solid, a bit below trend, but also the savings ratio, you may have noted, is still high. So we are experiencing a transition in an environment where Australians are still saving a significant amount of their income. And in that environment, to get the sort of consumption outcomes we're getting is not too bad, I reckon. But it makes it hard for many of those sectors which are really dependent upon consumption to operate a model that they had prior to the global financial crisis. If our savings ratio is going to be up, people are going to be borrowing less, people are spending less in some of those discretionary areas. That impacts in parts of the non-mining sector and parts of retail. But I'll tell you, a really interesting thing in the data is that if you actually have a look at some of the subheads in here, you'll see that I think it is furnishings and I forget the full title, but anyway, furnishings and something or other that go into houses is up very significantly, which reflects the investment moving into housing construction. So we're starting to see some of that come through, but there's no doubt that for a significant period of time, many of those sectors that fed on very significant spending in the consumer sector and discretionary areas have done it really tough, and they'll continue to do it tough in some ways as a consequence of an elevated savings ratio.
Mr Swann, last week Martin Ferguson said that Australia could experience a second pipeline of mining investments if the right policies were followed. Do you agree with that? Well,
it's a fact. That's what the CapEx figure actually shows. It shows the expectations of investment. We've still got $268 billion of investment in committed projects in that pipeline. That's still very big, and it will come off, but there are any number of projects on the drawing board which may or may not go ahead, depending on a whole range of factors. The biggest factor in the last 12 months or so that has really inhibited people. Sorry, there's two significant factors. One is the level of the dollar, and the second is the view of many mining companies that they weren't getting value for money in terms of their investment because they prioritised speed of construction over value for money. And you can sit down with any number of the senior executives in the resource sector and go through all the various components of that. So they're certainly looking at how they can get their projects going in a more cost-effective way. But there's still plenty on the drawing board, and that's precisely what the CapEx data that came out last week actually shows.
What does the government need to do to enable that?
Well, everything that we are currently doing, making sure that we've got a productivity agenda, making sure we get the environment right, continuing to work with the industry to make sure that many of these projects go to final investment decision. There's been a lot of publicity about projects that haven't gone ahead, but a lot of them weren't even in the pipeline or counted by Bligh. Some of them were. So there's no doubt there is a challenge. There's competition more vigorously from other areas of the world as well. So we've got to be out there and competing for it. So yes, I agree. But what that diagram tells us is that there's a reasonably significant expectation of further investment as we go forward. But this public debate's conducted as if investment's falling off a cliff. Well, it's not. It's just not in the mining sector. But yes, there are challenges. And of course, mining and commodity prices and terms of trade are all also very dependent upon, a healthy global economy and demand that comes from elsewhere in the world. So, there are plenty of swing variables which impact whether projects go ahead or don't go ahead.
Treasurer, you said it would be a good thing if there was a sustained fall in the dollar or depreciation in the dollar. How might that occur?
Well, I don't speculate about the pathway of the dollar or what its individual value is at any one day. I've always said that I thought the Australian dollar would start to come down when the US economy started to grow more strongly, and indeed that's largely what has occurred in recent times.
And what about the sort of concerns about how certain countries might be manipulating their currencies lower?
Well, we believe in market-based exchange rate regimes, and we lobby vigorously for them as we interact with our colleagues through the G20 and other regional and international forums. Do you want me to go back to yours?
Yeah, well...
Sorry, is there anything else on the GDP?
Well, I would argue this flows from the GDP.
Yeah, no, sure.
But, I'll just recap. So you said this is an incredible achievement. You went through the various indicators. I won't repeat them all again, but you're extremely proud of them. And as I said, previous treasurers might have been tempted to say they were a beautiful set of numbers. Why then do you think that the government isn't getting any credit for this? And while I've got you, do you agree with your Queensland colleague that the government has more trouble than Indiana Jones?
Well, first of all, I make the point that I wouldn't be standing here today if it wasn't for the fact that the Australian people believe that the actions we took during the global financial crisis stopped this country going into recession and has provided the underlying strength for the sort of figures that we're seeing here today. If we hadn't did what we did back in 2008 and 2009, we wouldn't be sitting here having a conversation about an economy which is 14% larger. And in fact, if you were to listen to the opposition who opposed significantly the stimulus measures that we put in place, and were arguing then for cuts to programs, as they are arguing now, we could well be in a significantly worse position if those sort of policy positions had prevailed. Secondly, during this term, the government's taken on some very big, tough reforms, and in so doing, we've had some paint stripped off us, no doubt about that. But we had the guts to put in place carbon pricing, one of the most significant reforms. I read in one of the papers the other day, someone had written an article saying that neither carbon pricing or the MRRT were part of the Henry Review of the tax system. They were, in fact, two of the Henry Review's most significant recommendations for reform in our economic system. And we've done both of them. The point I'm making is that this has been a government that has put in place significant reforms, and we've done it in the face of probably the most negative opposition in the history of the country, but we've done it for the right reasons. And when we get down to the business end of this term of Parliament, we're in an electoral fight. We can win, and it's a fight we must win, because incredibly, despite all of the evidence that is now emerging from Europe of the failure of austerity, that the Liberals under Tony Abbott are arguing such a policy for sharp and significant cuts to public expenditure in the middle of global uncertainty and these transitions that are taking place in our economy. And all that would do would be to hit jobs, to hit growth, to hit employment security, and it would fail to put in place the big investments for the future that we need to ensure that we make these transitions, particularly through our investment in education.
Mr Swann, do you agree with Laurie Ferguson's assessment that the Prime Minister needs to get personally involved in the asylum seeker debate, or the Labor Party is dead in Western Sydney?
Well, I certainly think that there are some very significant issues in this area. And of course, we're coming up, I think, to almost the 12-month anniversary of the appointment of the Houston Committee, and not too far away, or only months away from their recommendations. And those were recommendations that the Prime Minister worked with that expert committee on, and then when we took them to the Parliament, the Liberals wouldn't support them. And they effectively sunk a significant part of the Houston recommendations, which came as a package in terms of discouraging the people smugglers and people jumping on leaky boats and so on. So she has been full bore in trying to put in place a comprehensive response to stem the flow, which is now being substantially impacted upon by new push factors elsewhere in the world. And we will continue to do everything within our power to get in place a full suite of policies which stem that flow, not just to save lives, but also to make sure that we have some integrity to everything that we do in this area.
But the Malaysia solution wouldn't do much at this stage, would it?
Well, the Malaysian,
in place. It's only 800 people.
Well, but the fact is, if it was part of a package at that stage, it would have had a dramatic impact, and it was sunk by the Liberal Party. The Liberal Party, the best friends that people smugglers have ever had. In sinking that policy when they did that, they really tore a hole in an important set of recommendations which were meant to come as a package. And since that time, they've maintained this farce and this fiction that somehow they have a policy which could return boats to Indonesia. And that lie has been exposed time and time again by statements from the Indonesian government and more recently from the Indonesian ambassador.
Are you dismayed at some of what might be described as the ill discipline of some of your colleagues in recent days?
Well, you know, it's just the public who elect us expect us to come here and to deal with the really big issues that I've been talking about today. Jobs, growth, job security, education of their kids. And I think it's about time a few of the people that are out there just put a sock in it, to be frank.
Like who?
Well, we don't need a focus on our internals. People want us to be focused on the big issues which matter to them.
Can you win Lily, Mr. Swann?
Well, of course I can. Of course I can win Lily, but I don't take it for granted. And when newspapers publish made-up polling without any authentication of the data, it just is a partial answer to Phil's question before.
But what about this? There seems to be a perception. I mean, the Victorian branch seems to have written off the three most marginal seats.
Oh, hang on a minute. Look, what the Australian public want from us is us to get on with the job, and I mean us collectively. I mean the whole Parliament is to be out there talking about the issues that matter to them. They don't want us out there calling the election based on any number of bodgy polls, briefed out reports of what may or may not be happening, none of them authenticated, made up stories, all sorts of guff that sort of parades as if it's analysis. They don't want that. I don't believe the readers are interested in it, and certainly the public are not interested in that. They want to see a contest of ideas and a debate that matters to them. And I'm here today talking about perhaps the most important debate that matters to Australians, the future of our economy, jobs, job security, funding the investments for the future. And that's what I think they're interested in. And with those few words, I'm off.